everyone. A very good evening. You're watching The Money Show on ET now. This is your daily dose of personal finance planning, and this is the show, of course, where we answer your questions and queries as well. Now, of course, today as well, it's going to be the same, the same process where we help you out with your personal finances. And we speak about personal finances. It's not just about which mutual funds to invest in, but also what should you do about what you already have in your portfolio, and especially those investment instruments that are bleeding money. I'm talking about mid and small cap funds, and hence we decided to bring on board a renowned and veteran small cap fund manager. Stay tuned to The Money Show to know who it is. And later on the show, like we always say, earning money is nothing if you don't spend it right. And today the topic that we're going to be discussing is something we haven't been able to do or have had no inclination of thinking about up until now, and that's travel. The Ministry of Tourism has recently issued new guidelines, because do remember, folks, now that India has slowly started opening up, you will eventually be able to take domestic flights. Although not advisable, but yes, there are lots of hotels, lots of resorts that are asking you to book now, which you can avail as soon as things get a bit better. So we are going to be analyzing all of these offers. We're going to be talking about the new guidelines as well by the Ministry of Tourism. All of this on this episode of The Money Show. But first up, let me talk about mid and small cap funds. The inflows into these funds have only been reducing. In fact, mid-cap funds have seen a particularly high amount of reduction in inflows, almost 47% in the month of May. That's the third straight month of decline. Even small cap funds have seen a more than 20% decline in inflows. And naturally so, mid and small caps always are a bit more volatile compared to the benchmarks. And when you throw in actively managed funds, obviously the volatility is going to be even more severe. So how long is this pain going to be there? I mean, how long until you guys can see the NAVs and the returns from these funds finally turn into the green after so many months of red? We spoke up to a veteran small cap and mid cap fund manager, Mr. Vinit Sambre, Head of Equities with DSP Mutual Fund. So if you guys all the more have a DSP mid-cap fund or a DSP small-cap fund in your portfolio, then you've got to listen up. This is your chance to meet your fund manager. So Vinit, thank you so much for joining us today on The Money Show. Really a pleasure having you with us. Let's start off first by talking about your thoughts of the meltdown that we are witnessing in the equity markets. Obviously, a lot of mutual fund unit holders, a lot of investors are really worried when they look at their CAM statement and they see, 20 and 30% declines in their NAVs. In many cases, obviously the value of the MF of the mutual fund now is lower than what they've been investing as well. So, just if you could share your thoughts as a veteran small cap fund manager about this entire meltdown that we've been seeing.
Yeah, so I think clearly from the markets viewpoint, that is something which is not under anybody's control. And, we have seen that, let's say, the long range return coming out from equity, maybe in the, let's say, 11-12% range. But, if you just look at how these returns are generated, there will be up and down years, there could be very volatile years. So I would say that in the short term, the markets tend to remain volatile, and especially in these circumstances when you have such type of external big events which takes place. So I would say investors need to sort of exercise a lot of patience during such a period. Already if we were to generally think about our economy, even pre-COVID, we were decelerating as an economy, and we were just trying to sort of see how we could emerge better from the low growth, and we are now hit with this COVID related issue. So I would say right now, if we were to just think from the overall economic perspective, it is pretty clear that it will take a decent time for the overall economy to recover. And while markets have in a way ignored some bit of the depth of the problem which the economy is showcasing right now, but I would say that the markets finally they have to respect what's happening in the economy. So I would say the volatility may continue given that we are not out of the woods right now, but we have to think that the potential as far as we are concerned should come out eventually. I don't know whether it is 2 years, 3 years, 4 years, but we need to understand that the companies where we are invested are the ones which are going to define the returns for the investors. And what is it that these companies are telling us? These companies are telling us that they are becoming more strong in terms of their current metrics. They are trying to make sure that their survival is not only ensured, but they emerge out much stronger post the crisis. So, what we are watching is that these companies today may be getting impacted, but eventually these companies will survive and come out much better off in the near future. So I would say that the investors need to exercise patience till the time we do not see such recovery trends. And post that, I think that over a longer term, what we expect to deliver in terms of satisfactory returns for investors, that objective we will keep pursuing.
All right. Okay. Now, Vinit, unfortunately, with where we are in the job market, in the economic recovery cycle, many are facing job cuts, many are facing income losses, and there's a cash crunch problem. And hence, in fact, we as well on the Money Show have got this question several times. Should I pause my SIP? Should I redeem my mutual funds? So as a mutual fund manager, I mean, what is your opinion? I know obviously it's not a simple yes or no answer. One has to look at your individual status, where you are in life, and how bad is your cash crunch. But yeah, what do you think that they should use their other financial assets first? Like, for example, if they have any financial goal, given that gold is at 48,000, they should consider selling that before they touch their mutual funds?
I would say that there is no one right answer for this question. But if I were to just think about various type of investors and what they are currently going through, I think for investors who still are pretty much balanced in terms of their asset allocation, if they have maintained a discipline of following their asset allocation well, I think for them it's of no use to stop or discontinue the SIP. I mean, they can definitely continue if their incomes are not impacted, if they are not facing cash crunch, and if they are facing, but they have no other choice than to redeem. And as far as for few let's say enterprising people who might have gone overboard in terms of specific category, or might have gone overboard in terms of specific market capitalization range of category of stocks, I think for those it definitely makes a case to realign, rebalance, and come off. Let's say if their equity overall exposure has gone overboard and they have not been able to maintain a balance, I think for those type of investors, definitely it's a clear signal to realign themselves, and if they have less patience to see volatility, because we anticipate that or we are rather cautious on the overall market given where the economy is currently. So I think for those type of investors, it makes a case to realign their portfolio.
Okay, yeah. Like we said, there's obviously no one simple answer, and it would be best if you consult your personal financial advisor as well, before you take a decision. But Vinit, of course, helped you with the guidance on how you can go about it and how you can start thinking about it. All right, Vinit, the last few years, the last 2 years rather, have been characterized also with a lot of big names in India Inc. Really defaulting in various ways, their credit ratings being cut down. And yes, while that would affect debt funds, it's not something that would not affect equity mutual fund NAVs as well. And hence this question arises, especially because of the nature of mid cap and small cap funds. What's your stock selection process? I mean, how do you ensure that there's a filter in place to ensure that only good quality names enter the fund?
Yeah, so I think beyond the regular research which we conduct, where we are looking for companies, let's say, which are more capital efficient, less leveraged, good cash flow businesses, good management, there's also an element of some bit of the forensic research which we have sort of combined along with our total overall research process, and that today we are sort of using more. As far as the filtering is concerned, just to make sure that the issues which you mentioned, we should not sort of face such issues where we have to cut loss because of corporate governance issues cropping up or capital misappropriation issues cropping up. So what we're trying to do is that we're trying to sense that if we are able to get some early signals around these issues, that should be a better outcome for the type of companies which we want to own. And with that in mind, we have sort of increased the rigor of conducting the research with that lens. So I think I would say that we have those the regular research, which also itself is a pretty stringent process. We have very experienced team of research analysts working with us. So I think the filtration process is what we are trying to keep strengthening more and more, is what I can say.
All right. Okay, Vinit. Now, we on the Money Show as well, we make this one point very clear, and that is the time horizon that you should have when you consider investing in equity mutual funds. I remember at the beginning of this decade, we had brought you forward to speak about what was the secret sauce for DSP Small Cap Fund, because that one managed to deliver the highest decadal returns, and decadal is the operative word here. So, I mean, how important is time to consider, investing in small cap and mid cap funds?
Yeah, so I would say that these small businesses really take time for them to flourish, and we need to nurture these businesses. If you actually go through our portfolios, we have been very low on turnover, which also means that when we buy these companies, we typically tend to hold them for a long period. We don't sell them and don't buy them with a very quarterly type of a view. So we would rather urge investors to follow the same metrics what we are following, for them to see much better performance or much better return. Like I said, the companies take time to flourish and grow. There are immense opportunities for these companies, but they also keep facing intermittent challenges like we are seeing today. But what we have to look for is, in the end, will the companies deliver massive outperformance over their peers? And if those strengths are intact, then and if the portfolio consists of a combination of such companies, then I think investors should not be worried with these challenging period, and they should really look for a longer period. Even when the times are good, when the returns are getting generated, I would say that investors should focus on whether the companies still have the opportunity for growth, and if they do, then there is merit in retaining the investment over a longer term, unless there is a need for cash. So I would say equity has to be a core asset class which investor has to think this is one asset class which technically, if you ask me, has a potential to beat inflation, because the good companies, they have strong pricing power. They are able to price their product over their whatever inflationary cost bulging up takes place. So in a way, if one has to look at a long-term inflation beating category, equity remains a category, but it's volatile. So I think investors need to exercise those, investors need to actually digest and exercise patience out here.
All right. Now, Vinit, we call this segment very often the Meet Your Fund Manager segment. It's a chance where the unit holders get to listen to you. So why don't you share a message for all the DSP MF unit holders, current as well as prospective, and perhaps assuage their fears, amidst this entire fall in the markets.
Yeah, so first of all, I would like to thank all our investors wholeheartedly to have been with us for a long period or even for a shorter period. We want their investors' journey to be quite satisfactory, and that's our single objective with which we are doing what we are doing. So I think what we are trying to sort of control is the input which goes into our process, which I think is very, very relevant, because output or the final outcomes is something which is not under our control. What we can really control is qualitatively what type of input is going into our philosophy, into our thought process. So there we are putting in a lot of efforts to make sure that we are quite relevant to our investors. We are able to generate satisfying returns for them. We are looking to create alpha over the respective benchmark for each of our funds. So I would say that investors need to focus a lot more on what goes as an input, because that's something which we as, let's say, fund managers or research people can control. And outcomes eventually over longer term hopefully should match the kind of efforts which we are trying to put. And in these uncertain times, I think it is very, very relevant that investors need to exercise a lot of patience. They need to be more rational than irrational, because a lot of times the noise around you tend to create a lot of confusion in the minds, and that pushes them to take sometimes unwarranted decision. So I would say these are the times where one should not lose patience, not lose rationality, and one should keep having a good track, long-term track while making investment, and not remain worried. Equity markets are always about volatility. They will never be linear in nature. Otherwise, they wouldn't have. I mean, you wouldn't have been able to generate such returns over a longer term. So I would just wish them good health, stay safe, and thank them again for being with us as our investor family.
All right, Vinit, it was a pleasure having you with us today on The Money Show. Many thanks for joining in. And yes, our good wishes to you and the team at DSP MF, as well as we all try to tide over this COVID pandemic.